Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be with you today to break down the latest action in the markets. We've got a packed session with plenty of ups and downs, geopolitical twists, and some exciting moves in tech and beyond. So, whether you're a long-term investor or just keeping an eye on short-term trends, let's dive into what's shaping the financial landscape right now and how it fits into your wealth-building journey. First up, let's talk about the major indexes because they're setting the tone for the day. The S&P 500 climbed a solid 0.8%, inching closer to record territory, while the Nasdaq stole the show with a 1.6% surge, driven by a tech rally. The Dow, however, took a slight step back, dipping 0.15%, as some industrial and energy names weighed it down. What's interesting here is the market's resilience. Despite lingering uncertainties, investors seem to be shrugging off risks and betting on growth. For long-term players, this kind of split performance reminds us to stay diversified across sectors. Now, the big story driving sentiment today is the ongoing situation with Iran. While U.S. stocks appear to be moving past the conflict, with many believing a resolution could be near, there's still a lot of caution in other markets like commodities. Reports suggest a prolonged closure of the Strait of Hormuz could threaten global oil supply, and the IMF has warned that this war could weigh heavily on global growth, potentially even triggering a recession if it drags on. For us long-term investors, this is a reminder to keep an eye on energy exposure. Geopolitical shocks can create volatility, but they often present buying opportunities if you've got a steady hand. Shifting gears to individual movers, let's check out the large-cap winners. Tech continues to dominate, with Intel jumping nearly 5% and advanced micro devices not far behind at over 3%. Spotify also caught a nice tailwind, up around 4%, as investors anticipate strong user growth ahead of its upcoming earnings. These gains signal that the AI and digital economy themes are still very much alive, and for those of you building long-term portfolios, selectively adding to quality tech names on pullbacks could be a smart play. On the flip side, we've got some notable large-cap losers. Tesla took a hit, dropping more than 5%, as concerns over delivery numbers and competition in the EV space linger. ASML also slipped over 3%, despite the broader tech strength, possibly due to some profit-taking after a strong run. GE Aerospace wasn't spared either, down nearly 4% amid tariff fears impacting industrials. For long-term investors, these dips might be worth watching. Fundamentals still matter, and a short-term stumble could be your entry point if you believe in the bigger picture. Looking at the market movers by volume, Nvidia remains a hot name with a modest gain, continuing to ride the AI wave. Tesla, despite its drop, saw heavy trading activity, showing just how polarizing this stock is right now. Intel also made the list with that nice uptick, reflecting renewed interest in semiconductor plays. These names are often at the heart of market trends, so even if you're not trading daily, keeping tabs on their momentum can help gauge where capital is flowing over the medium term. Speaking of volume, the most active stocks today paint a similar picture. Nvidia and Tesla again topped the list, alongside names like Nike and Nokia, which saw some intriguing price action. Nokia, in particular, spiked over 6%, possibly tied to broader tech optimism. High volume often means high emotion, so for us long-term folks, it's a signal to step back and assess whether the hype matches the fundamentals before making moves. Let's pivot to earnings, because it's that time of year when companies start showing their cards. This week, we've got heavy hitters like JP Chase, Bank of America, and Wells Fargo reporting, giving us a pulse on the financial sector. Tech isn't far behind, with Taiwan Semiconductor and Netflix also on deck. Early results from names like Goldman Sachs and Morgan Stanley have been strong, beating expectations, which bodes well for market confidence. Progressive also popped with better-than-expected numbers, showing resilience in insurance. For long-term investors, earnings season is your chance to see if the companies in your portfolio are executing on their promises. Don't just chase the headlines. Dig into the trends. You can find exclusive earnings transcript summaries on MarketSnap to help you cut through the noise and focus on what matters for your investments. Zooming out a bit, let's look at the top large-cap performers over the past week. Garmin led the pack with an impressive 21% gain, while Shopify and AppLovin both surged over 14%. These moves highlight pockets of strength in tech and consumer discretionary, sectors that could offer growth for long-term portfolios if you're selective about valuations. On the other end, the past week wasn't kind to everyone. Genuine Parts tumbled over 20%, and Rivian dropped 14% as EV concerns persist. These short-term losses can sting, but for us long-term investors, they're a reminder to focus on the underlying business. Sometimes a sell-off is just noise, other times it's a warning sign. Sector-wise, industrials topped the charts with a 2.1% gain over the week, followed by consumer cyclical names up 1.6%. Energy also showed strength, up over 4%, likely tied to oil price volatility from the Iran situation. These sector moves can guide your long-term allocation. Industrials and energy might offer stability if geopolitical risks ease. Meanwhile, healthcare lagged, down 0.6% for the week, and utilities also slipped slightly. Financial services weren't far behind with a minor dip, reflecting some caution ahead of more earnings. If you're overweight in these areas, don't panic. Long-term trends often smooth out these weekly blips, but it's worth monitoring for broader shifts. Wrapping up the market action, the S&P 500's push toward all-time highs is a key watch point. Some analysts are calling the market overbought in the short term, suggesting we might see sideways consolidation. But if the bulls break through those record levels, we could be in for an exciting run. For long-term investors, this is less about timing the top and more about staying invested in quality. Let compounding do its magic over time. And over on the Nasdaq, the tech-heavy index is showing even more momentum, logging its longest winning streak in years. This kind of strength can be tempting for short-term trades. But remember, as long-term investors, we're here for the marathon. Focus on the sectors and companies driving this growth, not just the daily pops. One last thought on the broader economic picture. There's chatter about the Fed holding rates steady for a while, with officials like Cleveland Fed President Beth Hammack signaling a wait-and-see approach amid inflation and energy price concerns. For us, this means planning for a higher-for-longer rate environment in your portfolio construction. Bonds or dividend stocks might offer some balance if growth slows. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope this breakdown helps you navigate the markets with confidence. Be sure to stick with us for more daily summaries and dive into our SWOT analyses on key stocks to refine your long-term strategy. Hit that like button, subscribe, and we'll see you tomorrow for the next update. Stay invested, stay informed.